All right, there we go. Ancient Alien, I'm good, right? You can see me, hear me, all that good stuff. Was the stream not on? I'm thinking maybe the stream wasn't on. I don't know. I'll wait for a couple of replies here. What is going on, people? So I had actually started talking and doing all of that stuff, and I actually never pressed go live on YouTube like an idiot. So I guess I'll just go back over all of that stuff since I wasn't technically live, which means it wouldn't be in the recording either. Um, cheers. I'm an idiot. Shows you how busy that I've been today. Anyhow, yeah, so I've been like crazy busy this week, just really preparing for the Venom Algo release. It's going to be a massive update. It's version 4. Those of you guys that are in like the Astrobit Discord and stuff, kind of, especially those of you that are beta testers, kind of know what's really going on with all of that stuff. But we'll just kind of quickly go over it. I've been super busy just getting promotional material ready, getting just everything, right? Getting promotions in place and all of that stuff. So is there still a problem with it? So what, am I not streaming? It should definitely be live. It should definitely be live. I'm very confused. I'm just gonna roll with it. There shouldn't be any problems though. Seems like it's not happening. Well, that's not good. I mean, I'm definitely live. I don't know. I mean, I forgot to push the button before, but everything should be fine now. Um, sorry about that. Like I said, I'm an idiot. I forgot to push the go live button. Like a retard. It is what it is. Anyway, so yeah, no, I've just been really busy with that stuff. Last week I just kind of took the week off and was just focusing on things that were going on here at home and stuff like that. So back to our regularly scheduled programming. Release of the algo goes May 1st. There is going to be a promotion for that at launch. There's also going to be a special promo for those of you that are in here that are beta testers and stuff like that. You guys are getting like a special promo code. But for everybody else, it's going to launch with, like promo code and all of that good stuff. I'm making a special promo video for it, which I was working on today. So just been super busy. Those of you that want the full backtest results and all of that good stuff, I'm going to be updating my website probably tomorrow. Like I'm going to be working this weekend, unfortunately. So just to get everything ready for Monday. So got to do a whole bunch of stuff on Astrobit's backend. I got to update my website and all of that good stuff. So there is all of that happening. It is a lot, and it is like super, super busy for me right now, but it's a good busy, right? Like that's a good problem to have. I'm really excited for this launch. I've been working on this for a long time, and the updates are initially, you guys know that I'm like super, like, I hold myself to a high level of integrity and transparency. And unfortunately, when I first released the beta, it did not do so hot on initial release because the main indicator that it relied on was just not reactive enough. So originally, the strategy was built on the 1 hour. For this beta, I dropped the time frame down to the 15-minute time frame, and unfortunately, that indicator that it was based off of, it was just not reactive enough. So when it would enter a trade, it was basically like longing tops and shorting bottoms, which is obviously not ideal. That's not good. So what I did was pretty much got with the devs, just ripped out all the code for that indicator, replaced it, dropped the time frame down further to a 5-minute chart. And the back tests have been performing a lot better. I think removing that slow indicator was a very good idea. That was something that I had used initially um, on like the version that was originally built on like the 1 hour time frame, and it was just not fast enough for the 15-minute time frame. So um, let me go over to my chart and I'll show you what's been happening this last week with that. So let's see, we'll start back here. So got into a small short, longed it immediately, small profit here, not anything crazy. It was almost break even. Longed here, took partial profit here. And just by the way, those partial profits, I don't know if I'm the first one on Astrobit to have that, but I don't think very many strategists have that. So this is kind of like a newer thing where it's going to physically close a portion of your position automatically in profit. One, to book profits, and two, to cover your in and out of the trade fees. Okay, so your trade fees and a little bit of profit will be booked once it moves a certain percentage into the profit. So that's what happened here. Moved up further, closed the position. It hit the final take profit. It shorted this top, took partial profit on the way down. We ended up closing the short here. Oh, wow. It looks like it actually closed on this wick here. And then it longed on the next candle, took partial profit here, or actually here in the middle of this last big green candle. And since then, it's just been sitting in the long. So I know that this looks like a lot of price action, but it's really only like 2 or 3 days. So I think that's one of the things that's kind of going to separate this. Just along with the other risk management things that I have built into here in terms of like the trailing stops and like the stop loss ladder and everything. That in combination with the partial take profits that are automated, those are actually going to fire. I think that this is really going to be a game changer. I've never released something like this, but all of this is new for this update. And again, go live on May 1st. There'll be a little promotion for that, and like I mentioned, a special one for the beta testers as a thank you. So if you're in the Astrobit beta test, you guys are going to be well taken care of with this. I'm really looking forward to it. I'm excited. For the full back tests, those will be available on Astrobit the day of release. But maybe if you check my website, maybe tomorrow or Sunday, those should be updated because I have to update my website as well this weekend. I'm going to be really busy this weekend. So lots of stuff going on. But if we hop back over here, I'll just start going over the chart. Most of this is probably just going to be maybe down to the 4 hour, just because there isn't really too much going on. We're kind of like on this weekly chart, you can kind of see like we're stalling here at this very, very, very major level of resistance, which is basically right at 30K. So that is something that is good and bad, right? Like obviously we had this big bearish engulfing weekly candle here, but the price is rebounding really quick. Like these dips are getting bought up fast. And I think that that's mostly because of the belief that we're probably not going to be making new lows. And when I say new lows, I mean like, below 15.5. I really don't see that happening unless like it's like a massive black swan kind of event. Like I really don't think that kind of thing is going to be going on here. Now, the levels that I am watching here, like on the daily and the weekly chart, are down here at around 25K for basically just a retest, right, of these levels in here. So I want to see something like that before another move up. I think that would be very healthy for the price action. It would give the price action a lot more room to be running instead of just like seeing some massive God candle, like all the way up to like almost 40K or something. So that's really what I'm planning for. I hope that, it's kind of like a buy the dip scenario. That's the way that I'm going to be looking at it because honestly, I mean, everyone was kind of memeing this like head and shoulders kind of pattern here, but that's literally what just happened. These patterns on the weekly chart are very rare in terms of like how often they actually play out. But the thing that's happening right now is I do believe that this could move up to the top side further. But at the same time, we're not really seeing the kind of really large continuation that we saw here. Okay. So like I would be expecting like next week, if we didn't just like shoot up high to like 35, 40K, then the more likely scenario at that point, if we didn't impulse up from here, would probably be some kind of a retest. Why do you think there will be a retest? What indicators are giving you this info? Honestly, most of why I think that this is going to retrace, or it's not that I think it's going to retrace. It's more like I hope that it retraces, just because it would be a very, very significant buy the dip event. And these levels, it would be very healthy for the price action to be retesting these levels. It would give the price a lot more room to run. Now, obviously, we don't have to retrace here. Like I said, this could just shoot up to like 35, 40K immediately. But this price action is really stalling here. So like if you come down to a daily chart, we've got this yearly support and resistance level. This is just kind of like a zoomed in version of that weekly chart here. Price action kind of stalled, and now we're kind of bouncing around in this range. So it's basically like we're range bound from like 30 down to like 27 in like a $3,000 range. I'm not going to be convinced that we see a breakout of these highs until we start seeing more volume coming in. Okay, so again, still, if we look at the OBV, this OBV has just been flat and range bound in here for well over a month now, 2 months almost, 3, 4. Yeah, I mean, in another like week or so, this will be almost 2 weeks that we've been range bound in here, and it just has not been able to break above this level, which is very interesting. I mean, this goes back very far on the OBV. Obviously, charting on the OBV isn't like super accurate or whatever, but I've been watching this very closely, and there's just really no signs here of, large accumulation here. Since we got this last move up to the top side and then retraced, all of our momentum just started kind of dying off here. The volume per bar extremely low through here. So it's just, man, it's really, really hard to call here. I'm not really super sure if this would be the area that I would want to accumulate at. But at the end of the day, if we don't lose these lows at this monthly support and resistance level to actually make the move down into 25, then this is probably going to be the level that I accumulate at, because obviously the volume per bar that can turn around, really, really fast. So breaking through this yearly support and resistance level would be huge. If we do break through this, it is going to impulse. Like, it's going to go high very quickly. I would expect at least 35K minimum. And I don't even know as if I would be looking for shorts up here. This is another very, very main level, okay, that we had. This level was very major support back here in 2022. So that's going to be that next level that I would be looking for. Any longs from here, that's probably where I'd be like skimming profits off for sure. But in general, I mean, yeah, if this impulse is up, it's going to go high very quickly. There's going to be a massive liquidation event, and that's what I like to see, right? Like, we would definitely see some kind of like liquidation cascade off of that. I'm eating some pizza. Anywho, it's why this range that we're in right here is really interesting, because before we got this little impulse up here, the price action was just sideways for so long. Like, this was how long? 317 to the beginning of the month. So about 2 or 3 weeks here that we just consolidated in a very, very, very tight range. I think what's going to end up happening is the FOMC and whatever volatility that we see from that. I think that that's going to be what ends up being the deciding factor on if this just fucking skyrockets, or if we get like another, like some kind of like a head fake up here, right? And like a large rejection. A rejection after these highs would not be what you want to see, because that means that there's no demand and no one's chasing it, driving the price action higher, which wouldn't be good. But I think a lot of what's going to decide where this goes from here is going to be the volatility that we see next week. So on May 3rd, we have the FOMC. I'll be streaming that live on Wednesday at 2 p.m. Eastern time, 1 p.m. Central. And then on May 8th, that's the day that everybody has to be off of the Bybit exchange that doesn't want to KYC. I was about to say KFC. I'm like already eating pizza and I was about to say KFC. What is wrong with me? Yeah. So this is a little more flat than I'd like to see for a Head and Shoulders, but it is kind of giving me those vibes. I'm not going to lie. It's kind of giving me the Head and Shoulders vibes. I really don't know if I really don't like seeing the volume and the momentum starting to taper off here so close to the top. Now, granted, consolidating under resistance is bullish. Okay. That is very bullish. And these are levels that we haven't been to since, like literally last year. I think the last time we were at these levels was in April last year, or May last year. So 5/12. So literally it's been an entire year of fuckery and capitulation. This was, which one was this? UST and Luna. And then we consolidated. And then this was the FTX capitulation. And then after that, I mean, we reclaimed the level that we dropped from before before FTX went out. We reclaimed that super quick. Like after we consolidated down here for like, what was this? About a month and a half. It just skyrocketed. We immediately reclaimed those levels, did a small retest, kept going. Retested the previous highs here, kept going. Hit resistance, made a lower low, and this is where I started getting freaked out because I was like, damn, getting a lower low here, that's not a good sign because that means that chances are if we put in a lower high here, we're going to see fresh lows and the downtrend's not over. That didn't happen. We got like these 3 humongous candles, tested liquidity up here, and then filled the wick and kept going. Once we closed above here on this candle, that was pretty much the signal where I think that's one of the last longs that I took was on the close of this daily candle at 25. I wrote it up to I think it was like 28 or something. Once we stalled up here, that was where I closed it out because I didn't want to sit through the chop. And that last pump up, it just felt like such a head fake to me because there really wasn't very much organic volume driving that last pump, and it immediately retraced back down into major support. So either this was the head fake and we're getting a lower high here, and this might break structure and we move to 25 at the second monthly level here, or we're going to have this kind of situation here where we shoot up, we get like one God candle, we close above these highs, and then we just keep moving to the top side. That obviously would be the ideal scenario, but volume here is going to be very, very, very important. And the volatility that occurs next week with the FOMC and everybody having to move off that doesn't want a KYC from Bybit is going to be another big thing. Now, the Bybit thing, I'm not really sure how much volatility is going to be involved in that. For the most part, everybody knows what's going on. I would suspect that most people have already moved their stuff off the exchange. I personally am going to be moving my stuff from there and going back to BingX. So on my banner on my YouTube or whatever, there's a couple links there on the bottom right of the banner. One is my website, one is TradingView, one is Bing, and do I only have 3? TradingView, Bing, my website. Yeah, I think that's probably it. I don't know. There's 3 or 4 down there, but I'm going to be going to Bing. Good exchange. You can actually trade like USDT and actually trade indices. So like the S&P 500. I love doing that. I think it's awesome. Not very many exchanges have that. So I really like that as a feature. Classic exchange, pretty easy to use. So there's all of that. But but yeah, I think well, let's come down to like a 4 hour and see what's going on. So these are kind of like our major levels here that I've been watching. Most people that are chartists or like crypto Twitter and stuff pretty much have these same ranges drawn. I mean, how can you not at this point? Depends on just how you chart and how where you decide to place your lines. Obviously, these have been placed here since, damn, what day is this? March, like mid-March, it's end of March. So quite some time. I kind of took those lots of liquidity grabs up here in both directions. I think this might have been the last FOMC event. I'm not sure, but it was looking kind of like this was a head and shoulders here, kind of a funky shoulder here. But I mean, once this broke down, you got a solid retest here. It continued to the downside, which was really nice. Consolidated for like a day or two, and then broke back up. So what I liked to see initially was that we closed above this consolidation level here, which was nice, but then it immediately retraced 100%. So I think this was mostly the volatility of the announcement that there was going to be KYC on Bybit. So we had like this huge pump up, and then like they announced that, and it just immediately retraced like almost all the way. We even tapped down into liquidity from our consolidation level down here on this big old wick. So yeah, it's just been wild in here, like really, really volatile in here. I know that this definitely messed up a lot of people. Like if you were not prepared for this, it definitely messed you up. If you go back into earlier parts of the video, the new version of the Venom algo actually traded this entire thing just beautifully. It longed it, it shorted it, took half profit, and then longed somewhere in here, and it's still holding, which is crazy. Is this I mean, what, like this whole thing? I don't know if I'd really call that a pennant. That'd be a funky looking pennant. Um, I want to go ahead and say no on that. It just doesn't really look right to me for a pennant. This right here, if you come down to a lower time frame, this could be a flag. I think that maybe this could be a flag here, and maybe we're flagging. Like you've got your uptrend here, flag, and then we should be expecting some kind of a breakout to the top side. These are obviously the highs here that I'm going to be watching. We didn't break it the first time around, so that's kind of what I'm going to be watching here. So yeah, I mean, if you ignore, I mean, I don't know. I mean, if you chart like that, I guess you could kind of say that it's a pennant. But for me, honestly, this volatility stuff, I would almost leave that out and take it back to here and say, okay, we got a pennant, and this was a volatile throw over. So that's possible, but it looks really sketchy to me as a pennant. I really don't like that as a pennant. It just is really choppy as fuck price action. And this should not be red. This should actually be green here, because that is support now. We go through and we actually drag this over. This is actually our our main level of resistance. Now we've tapped into this twice. Again, this is why I don't delete stuff off of my charts. We were up here before, and after we broke down, I left this level here. I always like to leave these important levels here. They always end up being historically important, so that's why I like to leave them. This is another important level. This goes back to this super volatile wick that we had at the end of this was the last day of the month, so the end of the first quarter. And this level has also been very important. It was important here as a retest. We retested these highs and swept them as support, and now it's basically a midline in this overall range that we're at now. So it's kind of crazy. That's why I don't like really deleting stuff off of my charts. Everyone likes to ask me, oh, well, how did you know that the price was going to stall there? It's like, well, I've had the crap on my chart for forever, for 6 months, a year, or 2 years, so that's why I always keep that stuff there. Just historical levels are really important. I mean, we even came down here and swept into our consolidation. And this is the reason why seeing such a big reaction here and getting a massive quick V-shaped recovery here on this 1 hour chart like that. This is why I really don't think that we're going to end up seeing fresh lows all the way down here. Like, this is a very established range. There's a lot of very established supports and resistances in here. For all of this to break down and like physically making new lows, like way down here, actually no, way down here. I mean, it just doesn't make sense to me. Like, it just does not make sense to me at this point. for me personally, like, yeah, sure. Am I willing to like fade artificial rips at this point? Yes, of course, because I'm a trader. I'm absolutely going to do that. Um, but am I going to be like hardcore bear and be like, we're still going to 12K when we're hovering at 30? No, of course not. It's ridiculous. I'm not crypto capo here. I'm not going to say, oh yeah, we're going to make new lows in a couple weeks and go to 10K. Like, you're talking about like literally an 80% drop in like a couple weeks. That's just not going to happen. There's too much liquidity in Bitcoin at this point. It's not going to happen. Like I said, it would take a massive black swan event for us to be making new macro lows. Like, that's not happening. If you didn't get spot at 15, if you didn't get spot at 20, if you didn't get spot at 25, get spot here at 30 and then look for 25 or 20 if we get it. But if you're waiting for 10K, 15K, I don't think you're getting it. I don't think it's happening. I am like macro wise, I am in buy the dip mode. Like, this is clearly buy the dip mode, right? We got another scrape at almost 20. Most people were actually waiting for 25K here, and they got front ran. They didn't get it. Anybody that was waiting on the sideline and waiting for this level at 25K, they didn't get it. Didn't get it. Everybody thought that we were going to sweep this high. We didn't get it. And with this level that we have here, this consolidation that we just swept and then had a massive V-shaped recovery, a full recovery here. Yeah, no, that's a massive recovery. Like, that means that the majority of the market, all you have to do is look at the price action here. That means that the majority of the market is in buy the dip mode, and you shouldn't be fighting the trend. Like, if you fight the trend and you try to short this into oblivion, you're just going to get blown out. You're just going to blow up your account. It just doesn't make sense at that point. I love shorting markets. I love being bearish. I prefer bearish markets. But that's only because bullish markets like really don't require any skill. This is why I've been sitting here trading crypto and I'm still solvent since 2016, and most people are not, or they blew up their account, came back in 2018, blew up their account, came back in 2021, blew up their account. And they just can't trade. So I prefer bearish markets. I thrive off of like, the chaos and, oh my God, the exchanges are going to zero and the projects are going to zero and the hedge funds are going to zero. I love that stuff. I love it. I totally love playing devil's advocate and just like being super bearish. And I love doing that, but I'm never going to be like, like a perma bear or a perma bull. Those words are really niche in the space. And I feel like if you consider yourself to be a perma bull or a perma bear, you're just never going to be successful at trading, because you're always going to be trying to fight the trend no matter what the trend is. Like, this is why I don't understand how traders like Crypto Capo, for instance, or like Satoshi Flipper and Crypto Kaleo and stuff. I don't even understand how they're still solvent. I mean, they have literally been longing Bitcoin every single dip for like the last year and a half while it's been in a massive downtrend. I don't understand how people like that stay solvent. It just doesn't make any sense. Constantly bottom fishing, trying to long. And it just doesn't make sense. Like, why would you fight the trend? The trend is your friend. Trade with the trend. If the overall trend on the macro is bearish, then short the pops. Like that's literally your responsibility. Money will be the least of your worries once you dig deep into Apex's API. You keep this up, you're going to see great success and fortune in the near future. Yeah, I mean, I hope so. I appreciate that. Bias is killer. Price action is all that matters. Level to level percentage. Yeah. So I'm a big believer in just playing level to level. I mean, look at my chart. Right? My whole chart is level to level and levels of importance, historical levels, known areas of supply and demand. Like, that's the main way that I trade. Once I started looking less at indicators and started looking more at price structure and volume, I became infinitely more successful at trading. And that goes for all markets. Like, I don't just trade crypto. I trade Forex, I trade futures, I trade commodities. Dabble in some stocks and stuff. I don't do options, but um, I always trade level to level now and focus on the liquidity. You guys know I'm really big into liquidity analysis. We're going to get into that in just a minute here. I'm also really big into like order flow, just like having a global order book up and just looking at, okay, where is the volume coming from? Is it lopsided bearish? Is it, are bulls off sides here? Like if we bring up the liquidity chart and we aggregate these three exchanges here. This is High Block Capital, by the way. All the links to the tools that I use are down in the description below. Those of you that are joining, make sure that you smash that like and subscribe button and retweet the tweet for the live stream. I'm going to go a little longer because I pulled a fucky wucky tonight and thought I was streaming, but I actually never pressed the go live button. So I'm going to go a little extra for you guys since I technically started late. But anyway, highblockcapital.com, link in the description. I'm not sponsored. I'm not shilling a link, but I use this on a daily basis when I trade, whenever I'm trading or I'm looking to get into positions. This is quite literally the very first thing that I look at after I look at volume and price action. This is the very first thing I look at is I look at where the liquidity is to be liquidated. And then I look at order flow, like live order flow, like an actual global order book. There's actually a really cool tool for this that Cantor and Clark tweeted out. I don't know if he's partnered with them or if it's an affiliate, but I took a look at this and even the free version of this, what is this called? okotoki.com. So I'll post this link in the chat here for you guys. You guys can check this out. I don't even think you have to make an account to use it. But this is really cool. Like this is basically an aggregate order book and Dom Trader together across most of the major exchanges. I absolutely love this. I think that this is awesome. This is a super, super awesome tool to use. You can see the, I think probably the most useful part of this is the fact that you can see, like those of you guys that are familiar with like arbitrage trading and stuff, it gives you a chance to actually see like if price action is really volatile, you can see which exchange is the one that's bidding or asking, right? Like buying or selling. And you can see the physical price differences of how much volatility there is, given that one exchange or two exchanges might be dragging the price action up or down. I love this. I love Dom traders. I love aggregate order flow. I think that this is a super cool tool. This is free. And I'm probably going to incorporate this into my trading just because I like the style of this. It's really awesome. You can go in here. You can change all of the options, right, for the trades and the order flow. Some of this stuff is paid. So you have to have like a paid account to use this or whatever. I don't even know how much it costs. How much is it? $25 a month. That's not bad. I'll probably sign up for it. Not right now while I'm on stream, but for a limited time, we're giving a special $100 discount for a yearly plan. So that's pretty cool. Nice. Okay. Anyway, not a shill. I only just found out about this tool like literally yesterday or the day before. I'm probably going to be incorporating this, especially in times of volatility for all the reasons I just mentioned. This could be of very high importance for Bitcoin and ETH. Obviously, if you have a pro plan, I believe you can do this on the altcoins too. And there's a large selection. So if you're like a shitcoin trader, this would probably be really helpful for you if you're trying to get into order flow and understand why the price is moving and how the price is moving and which exchange is moving it. Where are these orders coming from? That's going to help you make a better decision to position yourself in the market. Very, very useful. Absolutely love it. But anyway, getting back here to the heat map. So this is the heat map. 12 hours is kind of a little shitty. So we'll go to, actually, you know what? I'm going to zoom in on this. If you look at this, so this is the price action is so flat. It's just like little dots for the actual candles. It's crazy. There is a ton of liquidity here packed on both sides of us. So this is another reason why I'm saying for next week, everybody knows that the volume dies off on the weekends. 90% of the time when the volume dies off, it's on Friday market close. Okay. That always happens. I really think for May 3rd, for the FOMC, all of this liquidity, maybe not this stuff up here at 32 or this stuff down here at, what is this, 26? Well, maybe in both directions. I'm not sure, but certainly this between 30 point, like basically 31, what is it? 30,005 and like 28K. Oh, yeah. I mean, I would 100% expect all of this liquidity to get completely swept out of the market. 100%. Especially on FOMC day. Like then, yeah. With all the volatility that comes from that, I would 100% expect all of this liquidity to get swept. It's like, well, Cobra, which way is it going to go? It's like, no, it's going both ways. Like it's going to go both ways. It's going to sweep all of this. Now, if we zoom out here, obviously 12 hours is really short. So let's zoom out and see where these weekly pockets are. These are going to be the more reliable levels. It's like on the weekly look back, and on the monthly look back. But we'll get to that one in a second. So right here, you can see like, yeah, sure, there's some liquidity below us, but most of the liquidity here is to the top side. See, most of this liquidity here is to the top side. So on this look back period, since it's highly aggregated across a week, there's like almost 6 billion above us sitting at like 30, just over 30,000. So I fully expect this liquidity pocket for sure to get swept. And if there isn't a lot of like spot follow through and a lot of really, just like spot aggregate order flow to keep pushing this higher, I just see maybe up to 31 max kind of getting swept. We got this little pocket of liquidity here at 31.2. So that's going to be like your resistance level. I fully expect most of this, at least the heavy yellow stuff, to get completely swept out. Now, obviously, as that happens, the price moves higher. People are going to be longing. That'll make these levels down here light up yellow as more people climb into the trade, obviously. But this is normally a pretty good indicator of like, okay, price tends to move towards where the liquidity is. Okay, well, where is the liquidity? 90% of people that are trading Bitcoin are trading derivatives. That's where the liquidity is. But what price level does it lay at? Well, right now it's basically 30K. That's going to be your major resistance. If we don't push above that, well, there might be some problems. But in general, this is kind of a really good indication. We'll take it up to a month and see what this looks like. And then I'll go to the individualized levels. Yeah, see on the month, it's not even until like way up here. Like there's a huge liquidity pocket up here at 31.2. So that's our highs up here. That would be a sweep of our highs. Okay. So right in here where we were at last time. See how we swept into this liquidity pocket? And then it just kind of acted, it took a lot of the liquidity and then it kind of acted as resistance. And we started just slowly grinding back down. We took a lot of this liquidity down here that started lighting up yellow. And then this got really hot and we wicked down and snagged all of it and immediately reversed. Price moves where liquidity is. The majority of the liquidity is above us. There's not very much below us on a monthly look back. I would totally expect this to be moving up before it moves down. That's just strictly based off of me looking at that liquidity chart. And that's pretty much it. So that would be my best guess is that there's not too much below us. We'll probably come up, sweep 30, 31K, and then probably reject there. Or see some kind of a consolidation, right? Like there's two kinds of consolidation. There's reaccumulation, and there's distribution. Okay, so those are the two kinds of and if you're in a bear trend, it's accumulation and redistribution, if that makes sense. You guys can read up all on that stuff. I'm sure Investopedia and places like that have more information on it. But basically, when you go flat, that just means that it's a level of consolidation, but being able to properly identify what kind of consolidation it is, that's what really matters. That's what's important. So let's come down to these individualized levels, and you can see here, like there is a ton of liquidity above us to be swept. And in general, we're a little closer to that. And the reason why I say that is I know that there's more to the bottom, and that's what attracts your attention here. But if you look, there's a lot more 50 and 100x shorts up here above our highs to get swept out than there are below us. There's really only one or two 100x. Oops, I don't know why I zoomed back out there. It does that sometimes. There's not really too much. There's only one or two 100x shorts below us to get swept out. And then there's a pretty significant gap here on this lower time frame. So Like we could dip into this and, sweep like 28.5 or something, but like seeing a full cascade of this would take quite a bit of selling pressure. But again, this is like a very, very, very low time frame. This is more for like intraday stuff or physically like, oh, okay, look, we're starting to eat through some of this liquidity. Where do I want to bid? Or, whose stop losses do I want to make my entries kind of thing. Um, that's the way that I kind of use this because it's a very small time frame. Like I said, this and staying on like a weekly look back. Actually, what happens if we go to like 3 months? How much does it change then? Where's the really multi-month liquidity at? So yeah, down here 25K, right at 25. That's that major, major, major level of support that like if we start hitting that, it's kind of a risky bid now that I'm looking at all of this because there's a huge pocket of liquidity down here at 22.5, which would be about 60 billion in liquidity down here, which is mind boggling. But at the end of the day, you have to realize a lot of the people that are open in positions from here, or that's where their liquidation is, most of them would be closing out their positions long before it ever came down there to liquidate them. So this is kind of like your first level here is like 25K. For a shorter time frame, like an intra week or an intra month move. That's why I'm saying like that is the buy the dip opportunity. Like if you're waiting for 20K, you might not see it. If you're waiting for 15K, you're almost guaranteed to not see it at this point. If you're waiting for new lows, I mean, you could be waiting an entire cycle before something like that happens. If next cycle we even go down that far. So, it's kind of a catch some game, but 25K, I think that's reasonable. I think this is a reasonable pocket of liquidity to grab. It's not incredibly far away from our price action. Granted it's, like what, 3,000? What is the price out here? 29. It's like $4,000 away. But it's not incredibly far away. It's not like it's like 15 grand. You know what I mean? Like going down to 15K, that's $15,000 move. I just really don't see that happening right now. So that, lends more credibility for like, okay, you should probably be trading with the trend and buying on dips, like that's kind of the way to go. Like if you want to short the lower highs, yeah, sure. For a short term trade, yeah, absolutely. Like there's money to be made there if you're experienced enough and have the risk management to be able to gulp it. But in general, if you're trying to like go for the easier trade and just be more patient and be accumulating a lot more on spot and not necessarily trading with leverage, 25K would probably be where I would be eyeing. And if you're already long, I would be looking to be selling up into this. Like you start getting into 32, 33K. Oh, that's like take profit mode. I would be taking profits there and then looking for a retrace to buy back in. So that, it's trading with the trend. Most of that stuff's pretty standard. Yeah. I haven't even really drank any of my beer. Cheers, guys. We do a little beer drinking. If you guys have charts that you want me to look at, I'll be more than happy to go over them at this point. It's right about 9:00 now. Like I said, I started actually 15 minutes late because I just forgot to press the go live button like an idiot. So I'll go an extra 15 minutes, make the stream like an hour. I think I finally pressed the go live button like almost 20 minutes into the stream. So I'll go another 15, 20 minutes. If you guys have charts you want me to look at, throw them at me. If you guys have questions, ask them now. If you guys want info or you guys want to see the back tests and stuff for the algo, I'll be more than happy to go over some of that stuff. How are you doing with the KYC rollouts? So I'm just going back to BingX. I do have a Bybit account and it really sucks because like I switched to Bybit literally. When did I switch to it? I think I switched to it like just before or after. No, it was after because I got screwed on FTX. I had a decent amount of money there that I lost. And I switched to Bybit with the money I was able to salvage. And then after I took the rest of my money and put it on Bybit and started trading there. And now Bybit's going full KYC, but I already had an account and I was trading briefly on BingX and I really liked it. I just switched to Bybit because it's Bybit, right? Like it's a big name. It's got a lot of liquidity, blah, blah, blah. But now that uh now that Bybit's going full KYC, I'm probably just going back to Bing X. Yeah. Well, I mean, the front end wasn't too bad on Bybit. I actually, I liked it. I mean, from when they first released, when they first opened their doors, Bybit's front end was hot garbage. It was terrible. It was really, really bad. You couldn't aggregate the order books. There was like no way to get a hold of like customer support. The fucking exchange was laggy as hell. It was kind of a disaster, but I feel like that's like most exchanges when they're newer. Bing X has done a really good job. Um, Layout is really snappy. Never had a problem with like crazy lag or anything like that, which is good. I didn't need to use the front end. Oh, you were using API? There you go. Yeah, the front end now is really good. Like they had kind of that fucky wucky the other day where like a lot of people got locked out of the exchange. I think it was last week or the week before. That actually affected me too. Um, and one of my positions actually got liquidated because I couldn't physically log into the exchange. They were having problems, of course, during volatility. Um, but in how long and how much I've traded on Bybit, that's not like a regular occurrence. You know what I mean? Like on BitMEX and on Binance and stuff, that's like a regular occurrence. Even on Coinbase, that used to be like a very regular occurrence. On Bybit, it wasn't really ever a normal occurrence for something like that to be happening, which was really weird. So yeah, I don't know. I think I'm probably just going to switch to Bing X or whatever. Honestly, I'm hoping that I can move like all of my funds like in time and stuff and just kind of aggregate stuff and kind of rebalance the portfolio because I would like to trade the FOMC live. You guys know I do that. Um, but at the end of the day, I don't know if I'm going to be able to make it in time. So we'll have to see. I'm not really too sure how that's going to end up going. But I don't know. I mean, we'll see. Yeah, I mean, pretty much for this week, or at least over this weekend and like Monday and Tuesday and stuff, I'm just gonna be really busy with the algo release. So I'm not, like May 8th is the day to get off the exchange. Cool. Like at least I know I've got time after my release because that's gonna be like kind of crazy. Um I've got to shut down all my APIs on Bybit. I've got to move all my money out from there. Like it's just a pain in the ass because like this is like the second or third time that I've already had to do that like within the past 6 months, and it's just a pain in the ass. I don't like doing that. Nobody likes moving their funds around and constantly making new accounts on different exchanges and shit. It's a pain in the ass. All the different 2FAs that you have to keep track of. It's just a mess. I hate doing it. Um, but I'm not going to have a choice. Like, okay, I move my funds off of there or I lose them. So that's not awesome. Kind of a downside. What are you guys drinking tonight? Bourbon? I'm just having a beer right now, at least. Me and my wife are probably going to hang out later tonight after the stream, have a couple drinks, maybe make some shots or something. Because she's starting a new job on Monday. So that's going to be fun. Well, for her. Well, I guess for me too, because it gets her out of the house. Yeah, so we're going to be doing that. That's going to be cool. Um, let's see. I enrolled my daughter in private school. We did that. She starts at the end of August, so she's got like a couple months more left. I may reconsider Bybit. I mean, yeah, I don't have a choice. If they're going full K, like I'm not doing KYC for fucking trading small amounts of Bitcoin. I'm already KYC'd on my brokerage that I can trade spot Bitcoin on. I don't trade spot Bitcoin um on any of these stupid, like crypto exchanges and shit. If I'm buying spot, I'm physically buying spot and holding it in a hardware wallet. And normally, if I'm buying it, I'm probably not even doing it on a brokerage. I'm probably doing it through BISC, and just buying it P2P. So anything with my algo is not going to be affected by Bybit, because all of that stuff runs through TradingView. So the API talks to Astrobit and then allows Astrobit users to connect to whatever exchange they want to connect to. So I'm not going to be affected. Like my products and stuff are not going to be affected by that at all, which is a good thing. That's really good. Um, I think I don't. I mean, I don't think that Astrobit has plans on removing their API links for that. Like that's not a thing. Like they're not going to remove it. I mean, like Bitfinex is still an API connection for them, and they still have that. Um, I mean the algo just runs off of well, no, but you don't have to use Bybit though. You can use whatever. You can use Coinbase, you can use Kraken, you can use Bitfinex. So what Astrobit is doing is next week after they all come back from consensus, they're actually going to be implementing ApeX or whatever, ApeX.exchange. So that they're implementing a DEX, which is really good. Yeah, it works with anything because it's running off of TradingView. The only way that I'm limited into what exchange people can use it on is the API connections that Astrobit physically has. So right now they offer, like Kraken, Biffin. Yeah, the webhooks, exactly. 100%. It all comes from TradingView to Astrobit, and then Astrobit webhooks and APIs into the exchanges like that they partner with and have deals with and shit like that. Um, and like that's pretty much it. So luckily, I'm not going to be affected by that. Um, Now, users that are on Astrobit that are using Bybit, if they don't want a KYC, obviously they're going to have to go somewhere else. And that's why Astrobit is going to be introducing their first ever decentralized exchange connection, which is really cool. I'm super looking forward to that. I wanted them to do Didex, but apparently there was like some issue with that or whatever. I don't know why. Didex and Apex, they both go through Starkware. See if I can find it here. Not Starware, Starkware. I forgot the K. Let's see. Yeah, so this is see now this is what's confusing for me. I don't understand how Apex and Didex are considered truly decentralized if like they're going through this platform. So like Starkware runs those exchanges, right? So like when you go here, StarkX, I guess. Features. Yeah, okay, so look, like right here. Customers, Apex, Didex, Rhino. Like these are so-called dexes and decentralized things, but Starkware is a centralized company that's providing liquidity. So it's like how is it actually decentralized if the corporation that's behind giving them liquidity is central? Like that doesn't make sense to me. I don't know. Maybe it has something to do with the actual blockchain tech or something. I don't know. I would have to read into it more and get learned more about that stuff. I'm just a trader. I like, to be honest with you, I give no shit about any of the technology. Like I really don't. I don't care about NFTs. I don't care about all the different wallets. I don't care if it's centralized or not centralized. I've been trading for 12 years. I've got brokerage accounts that you definitely have to KYC and give your social security number and passport for. But it's just confusing to me because it says, oh, yeah, these are all of our customers. Like, well, if these dexes are a customer of yours, then how is that exchange technically decentralized? Doesn't it? It's like, yeah, exactly. It's like they're centralizing decentralization, which completely defeats the purpose. So, like, while Apex and Didex and stuff are considered, and Rhino, are, these things that we've heard of before are considered decentralized. It's like if you start digging deep, like all it took me was 2 clicks from the Apex exchange, literally right here at the bottom of the page. If you go to their actual exchange here, right at the very bottom, it says right here in the very bottom of the screen right here, powered by Starkware. I noticed this yesterday. So I clicked on it and it brought me here. And I was like, wait a minute. What the like what? And like immediately that's when like, the wheels started turning and I was like, well, what the fuck? Like that doesn't make any sense. How is it decentralized if they're getting liquidity from here? Like it doesn't what? Like I don't know. It's confusing to me. Like that aspect of it just is either too technologically difficult for me to actually understand and it's way over my head. And it's actually decentralized somehow and they just have like a part in like uh the actual order book, like the matchmaking and stuff for the order books across the different platforms and it's like just a service to aggregate all of their liquidity. But if you're aggregating all of their liquidity, how is that decentralized? Like, am I crazy? Am I just dumb and I don't understand this? Like, I mean, I'm pretty tech savvy, but when it comes to like blockchain stuff and how that works, like I'm kind of fuzzy on that. But right off the bat, looking at that, it just confused the shit out of me. And I just don't understand like how like it- how is a decentralized exchange decentralized if it's using an aggregate for its liquidity? It doesn't make sense. Like it boggles the mind. And somebody actually said, "Oh yeah, I registered on Apex." I think this happened in the Astrobit channel. Somebody registered on Apex. They connected their wallet, and they had to deposit their funds to the exchange to trade. What? That immediately right there is not decentralized. Like you should be able to trade directly out of your MetaMask wallet, out of your hardware wallet. That is the entire point of decentralized exchanges so that you can do that. And they were like, yeah, no, I had to go to the exchange. And in order for me to trade, I had to deposit funds onto the exchange. And I was like, wait, what? That doesn't make any sense. It was like, yeah, I don't know. It's supposed to be decentralized, but they have my funds now like on the exchange. Like it left my wallet. And I was like, wait, what? So I don't know what's going on. I was under the impression that you can just connect your hardware wallet and trade from that. Now, I've done that on Didex with a VPN. I connected my Trezor and linked my Trezor and my MetaMask together and connected MetaMask and signed the transaction to trade on Didex. Didex is connected to MetaMask. MetaMask is connected to my Trezor. I open and close trades successfully directly from my hardware wallet. Like I could see the transactions happening on my Trezor dashboard as I was making them. So I know that it was working, but I don't know, like now that kind of makes me feel uncomfortable. It's like, well, should I really be signing transactions and giving an exchange access to a wallet on my hardware wallet? The answer to that is probably no, but so I don't understand. It's like there's really no safe way to trade at this point. Like crypto's not the Wild West anymore. It just seems to me like, okay, if you want to trade legitimately, then fucking pony up the money for the trading fees and fucking get your head out of your ass and KYC like you would when you're opening up a Fidelity account and just go for it and just trade like you normally would on an exchange that has legitimate liquidity because you know that market makers don't give a shit about KYC because they're doing over the counter deals and shit. %30 Wix on AVAX pairings. Yeah, no. Yeah, I personally don't really give a shit about KYC. I'm KYC'd on a ton of exchanges that operate in the US. I honestly don't care. I've been trading for 12 years. If you want to trade, then you got to answer the questions. You got to do it. That's just the way it goes. I mean, you want a Fidelity account? You want to roll your money into an IRA and diversify it yourself? Okay. Then if you're depositing 20K, give us your name, give us your address, give us your social, give us what kind of work do you do, answer questions about your trading experience. It's pretty standard. Like, I don't really understand what all the fuss is about. AVAX USDC on Trade Joe and Pangolin. I've never even heard of those. The best right now is BitGet. I heard BitGet rugged one of those influencers that they had. There was an influencer on Twitter that said he got rugged for like 200K. But I don't know if that's true or not. And the guy was like involved with like some shady fucking illiquid project or whatever. So who really knows anymore? I don't really trust anything. But BitGet is good, but I heard that they don't have tons of liquidity. And recently they did something to their front end on their exchange, and it was like, I don't know, it was like a downgrade. It wasn't an upgrade. Because I checked it out, and it's like too simple. It's like their front end is like too simple. Like it's like Coinbase Pro, how you can't even put, like, to this day, I still don't think that you can put like actual indicators on the chart. Like very limited functionality. But FEMX has garbage liquidity. That's why I think most of the liquidity, that's why it's going to that's why people are going to these centralized exchanges, and they're just saying fuck it and doing the KYC, because at the end of the year, if you don't file your taxes on crypto, the IRS is just going to audit you anyway. And then you're in trouble. Then you're in double trouble, because now you didn't report capital gains on your crypto, and you were trading it on an exchange that you weren't supposed to be trading. So yeah, most of Bitcoin is getting traded with bots. Most of it's algos, but that's always been the case. I mean, algos have been controlling the legacy market since like the 80s. Ever since digital trading was first introduced, that's always been a thing. Even in the legacy markets, that's always been a thing. There will never be a US centralized exchange that doesn't have KYC. It'll never happen. Those days are over. If you weren't around in 2016 and 2017, then, and you never got to experience it at that point, you never will. It's not going to happen now. It's just not going to happen. They're coming down on crypto really, really hard. They want to regulate the shit out of it. And they're succeeding, like, straight up. So, I mean, those days are just past. It's just not going to happen. So there are venues that offer leverage in the US with KYC. No, there aren't. Zero. No, Kraken actually completely removed it. They don't even offer it anymore. First, they used to offer up to 5x leverage, like back in the day. And then I think it was 2 or 3 years ago, they got rid of the 5x leverage, and they put the cap on it. Like you said, like you had to have 30 or 50K or something. And then they removed that too, because the SEC started getting involved, and they were like, you're not allowed to offer any leverage. So they fucking removed it. So they don't even have leverage anymore. Yeah, I mean, it's just, if you can either, at this point, it seems like you can either trade illegally on an exchange you're not supposed to use, that's out of the country with a VPN if you want to use leverage, or you do all the KYC and trade on an exchange that's in the United States and never be able to use leverage at all. and the whole reason why there's no leverage on the US exchanges is because there is no regulatory clarity on it at all for Bitcoin futures. Like it's just not a thing. Like there's no leveraged products that you can trade in the United States for Bitcoin. And the ones that there are, you have to have like a serious bankroll. Like you got to have like 100K. Like it's got to be like a significantly large portfolio in order to even be, to be able to do it. I mean, it's just like with my brokerage account, right? Like I couldn't short any stocks at Fidelity until my account was 25K plus. Like that's just the way it is in the United States. If you want to be able to short sell a stock and use margin, you have to have 25K plus. If you want to open and close more than 3 trades in a week in the United States and be classified as a day trader, that there's physically a law in the United States. Like if you open and close more than 3 trades in a week, that's considered pattern day trading. And you better pony up the remainder of $25,000 to meet that limit on your account. Otherwise, they shut your account down and they fine you. And that's it. And that's what they do. That's how the US is. It fucking sucks. It's terrible. Yeah, I'll check back with you later on it. I mean, trading API is pretty much the only way to go. But like if you want an account, if you even want to open an account and have access to API, you have to do some sketchy stuff to get around the geo restriction. So like whether that's using a VPN or whether that's using your passport from a different country, like for the most part, KYC on some of these exchanges is not a problem for me because I have a residency in Bolivia where my wife lives. Um, so I have a Bolivian passport, and these exchanges don't have restrictions in Bolivia. I can just KYC with my Bolivian passport. Done. Like I don't have an issue with that. But for people that don't have like dual citizenships or passports from other countries or whatever, like it's a pretty serious problem. Like that's kind of a big deal. Um, so if you don't have dual residency somewhere where these exchanges aren't restricted and they're not geo restricted or whatever, I mean, you're kind of fucked. It's like, well, what do you do? Like, where do you go? Do you go to Coinbase and pay absolutely astronomical fees out the ass and trade with no leverage? Or do you like trade like kind of sketchy and questionable legality and like, register for an exchange that offers leverage that doesn't do KYC yet and take that risk? You know what I mean? Like, it's just like for a lot of people, especially if they're trading with more money, it's just not worth the risk. At that point, it's just like, okay, screw it. I'm just going to trade on spot. So, um, most of the Bybit liquidity, I'm thinking, I think it's going to be going to Prime XBT. I think it's going to be going to Prime. Prime's been soaking up a lot of that liquidity. I've been watching outflows and I've been keeping an eye on like the order flows and stuff on chain. And a lot of the liquidity from Bybit is like going into Prime XBT wallets on chain. If you look at the chain analysis, which is kind of crazy. So I think Prime is going to be like the next big one for leverage and stuff. I think a lot of people are going to start trading there. I might consider that as well. But again, I'm just going to stick with BingX for now. I mean, I already have an account there. If I have to change eventually because they get hit with doing KYC too, then I will. But yeah, spot market making. US customers are already smoked there. If you registered on that exchange with a United States IP address, guarantee you they sent you an email 100%. And they're going to shut your account down 100%. Yeah, they did it months ago. They did it a long time ago. Everybody is getting rid of as soon as it happened months ago when they started with all of this fucking stuff with the banks failing and Silvergate Bank, and everybody knew that they were going to be coming down with hard restrictions and regulations and stuff. That's what started happening. All of the exchanges are just like, whether we offer KYC or not, screw US customers. We don't want anything to do with it. They got their heads up their ass. Nobody wants to deal with us there. And this is the reason why there's such a big battle for this going on. Like with Congress and our lawmakers and stuff like that. Like this is a really big deal. There's a lot of liquidity to be had in this. And there's a lot of money to be made for the regulators and for the exchanges and for the compliance offices. There's tons of money to be made with this. And the US is just like, nah, let's just ban it. And it's like, what? Like, that doesn't make any sense. Like, countries around the world are starting to accept Bitcoin as legal tender. And I'm not just referring to El Salvador, although that's the big one, but like, it's already been accepted as legal tender in like the Netherlands and in Sweden, Russia, China, like there's tons of countries out there that literally accept Bitcoin as legal tender. And the US is just like, meh, let's ban it. Oh, we can't figure out we don't want to spend the time to figure out how we can regulate it in this country. Let's just ban it. They're doing the same thing with crypto now that they tried to do with the internet. They ignored crypto from the very beginning. They ignored that it was going to be a big thing. They ignored it. Oh, it'll never be a thing. It's hacker money and for people to use to buy drugs on the dark web and shit like that. And they completely ignored it and it blew up. And now what's happening is they're just trying to ban it. That's not going to fly at all for business reasons. That's never going to fly here. And what are people going to do? They're going to use it anyway. Same thing that happened with the internet in the 80s and early 90s, right? They said, oh, it's not going to be a thing. It's not going to change the world. It's not a thing. It's a fad. No one's really going to use it. Well, everybody used it. And now it is literally a part of our daily lives. And that's part of what they're trying to do with some of these new bills, like with the TikTok bill. It's like the Patriot Act for the internet. It's the regulation and the spying that they were never able to implement on the internet because they didn't understand it 30 years ago. So we're just seeing that same process play out with crypto. It's really that simple. Like, crypto wasn't a thing. It was never supposed to blow up. They didn't believe in it. They thought it was just a passing fad. They ignored it. It got huge and it went completely unregulated for a very long time. And now they're just now getting their heads out of their ass, like basically 15 years later and saying, oh, okay, well, let's just try to ban it. And it just doesn't make any sense. It doesn't make any sense for business. It doesn't make any sense for investors. It doesn't make any sense on a global if you look at it as like a global thing, it just doesn't make sense in terms of global trade and economics. I mean, it's just really bad. Like if they just outright start banning crypto and just start shutting down these exchanges, it's not going to be good. Like businesses are going to leave. Like corporations are not going to want to step foot in America. Anybody that wants to have anything to do with blockchain technology, digital assets, or anything is never going to incorporate or start a business here in this country. That's really bad because this is like the next phase. This is the next part of evolution, for us as humans. It's like, okay, we had a digital revolution. Now we're moving towards like 100% full digital styles of payments with money, and money is going digital. That's like the next phase in our digital revolution. And our country is just like trying to stifle it and fall behind. Like they're so stuck with their old ways. They're so tied to their world reserve currency status in this stupid currency that's massively inflated. And they're scared because they know that digital currency can wipe that out. They know that they can wipe that out. So, if they can't allow something like Bitcoin or any digital assets to start threatening the belief in the US dollar. It's not that it would like completely devalue the dollar. That's not what I'm saying. Some people that is their argument. Oh my God, the US dollar is so inflated. Everybody's going to move to crypto and the dollar is going to go to zero. That's not what's going to happen. But what is going to happen is people are going to lose faith in the dollar. And we're already seeing that. This kind of gets into geopolitics and stuff. But at the end of the day, what ended up happening was when the United States started imposing sanctions on Russia, that didn't really affect the Russian government because the Russian government doesn't really hold very much dollars. I mean, they do, but who it really affected was physically people in the country that hold dollars, that transact in dollars, either internationally or otherwise. Basically, the US government came along and said, okay, we're not going to transact to you in dollars and that basically made anybody in Russia that holds dollars, it made all of those dollars worthless. It was basically the United States just pulled the plug and said, okay, all your US dollars are worth zero. Well, that's why other countries are moving away from the dollar right now. That's why other countries are making deals with like OPEC and stuff and doing and closing their settling in Chinese yuan for fear that the US government is going to come along, pull the plug and say, all your dollars are now worth zero. Well, because we just did that to Russia. So what's to stop us from doing that to any other country, right? We could just come along and just say, you go to zero, you go to zero, everybody goes to zero. And first of all, that's bad for global trade. It's bad for global economics. It's bad for trust in the dollar. It's just fucking terrible. And it's even worse. The people that it's worse for isn't the people that we take that value away from. Where does all that value go when you take it away? It comes right back to the United States. If we say, oh, all those dollars are worthless now, those dollars come back to the United States, we see inflation. And it's only going to get worse from here. If people think the inflation is bad now, it's only going to get worse. Because now other countries like, Malaysia, India, China, Russia, I think Pakistan and Saudi Arabia, they're all, and Brazil too. I think they're all settling transactions now with like OPEC and oil, and for like natural resources and stuff, like international trade. They're settling it in the Chinese yuan. These countries are actively moving away. They are fleeing from the dollar at lightning blinding speed. And the Fed and the US government has no idea how to deal with it because they've got their heads up their ass. They don't know. Well, I can't go into the next part. If I start rambling about that stuff, I'm going to get demonetized or something. So I won't go into what our government is all more concerned about. But I'm pretty sure we all know what the government in the US is more concerned about than our own welfare and international trade at this point. They've all got their heads up their ass and they're concerned with, they're having an identity crisis, if you kind of get my drift where I'm going with that. Again, I can't say more on it because YouTube will fucking shut me down and demonetize me or whatever. But I mean, like, and just that is crazy. It's like I have to be careful what I say on a stream. I can't talk openly because I have to fear that my channel will disappear. Like, really? It's just ridiculous. And the whole thing is ridiculous. But more and more the countries that move away from the US dollar, it's really bad for us. Those dollars come back. It creates more inflation. It makes prices go higher. Biden can scream and yell all he want at the sky about, look at all the jobs I've created. But at the end of the day, there's no one to fill those jobs. We've got the lowest unemployment rate in 50 years, but inflation is super sky high. And we've got 2 open jobs for every 1 unemployed person. And the unemployment is at 50-year lows. When you put all of those things together, you get massive inflation. When you pile on top of that, big world powers that have tons of liquidity actively not transacting in the US dollar anymore in the world reserve currency, well, kind of going to be the end of an empire, I think. It's really, really bad. Poor high. I don't know if you look at TPO. I mean, not on this, but we might get a little push here. I mean, yeah, it'd be cool. It's like barely budging though. Like, I'm not really going to be impressed until we like break above like 29.5, but maybe. What I'm saying is pumping Bitcoin. Move away from the dollar. Buy Bitcoin. Pump my bags. Yeah, it's moving slow. I mean, it might. I really don't think that we're going to see much of any kind of move or whatever this weekend. It's just chopping in a terrible low tiny ass range here. I mean, it's just bad. This honestly, like, this does not give me incentive to trade. Like, this looks like garbage. I'll probably take, like I said, I'll probably take advantage of like the FOMC or whatever. But this, for all intensive purposes, looks like duty. Like, it looks bad. Not awesome. First high that needs to happen is like 29.5. Well, I mean 4 and then 5. Like, we've got these levels like directly on top of each other. So normally when that happens, if you've got like a technical level right here and then a psychological and technical level above it, I normally just ignore this level and just stick with like, okay, this level right here. That actually lines up really nicely. Boom, right at 29,550. If you want to get technical, you might be able to, draw it back down here if you want to average it out, because that's kind of a level. But in general, I just like to, draw a box. Okay, here, here. This is your like low time frame. If I want to get rid of this. Oh, this is on the wait. Yeah, wait. What? Yeah, let's get rid of that. And we'll get rid of this one. Basically, that's what we got. Like that's our 15-minute range. Here's our high. Here's our low, pretty much in here. Like just some quick active charting for you guys. That way you guys know I'm not a troll or something. And then you've got pretty much this level right here. Okay. It was all like chop and consolidation through here, but in general, this is like kind of your support zone. If you want to get super technical and be like, oh, our very, very immediate level of support, it would be that, like this level here. Okay. It acted as resistance here. So you've got this level here, and then you've got this basically as your resistance. And that's kind of what you've got. So if you're looking at immediate areas, then that's your zone. Ignoring all of this below here, because that was below it broke into this level. But I don't know. I mean, this level needs to break up here for me to even be interested in anything. It's just so sideways and choppy right now. Funding is negative. I mean, funding being negative on inverse perps, I'm pretty sure that that's normal, right? Go to CoinGlass. What are the metrics for Deribit? Futures, Bitcoin. Let's look at the options expiry for Max Payne 29,250. We're not, well, 29,250. Oh, so that's basically what's happening. It shot up. People are buying options for that. The order flow's coming in. June 30. So end of month. 29,250. For puts. Yeah, that's a pretty big strike right there. How much liquidity is that? 12 million. That's not too bad. That's not that much. I've seen it a lot higher than that. What is it for Ethereum, I wonder? Take a look at Ethereum real quick. 1900. Yeah, that makes sense. It's not, again, it's like not a crazy amount. It's only like 2 million. So I wonder what it is, because most of these are already starting to settle. People are averaging out of them. So let's do wait, March. Oh yeah, because I can't look at the next month yet. Yeah, I don't know. It's not that big. Let's look at the funding rates then. OKEX is flipping negative. Gate.io is flipping negative, but no one ever really trades there. CoinEx is negative and getting bigger. Damn, theirs is huge. Why is theirs so expensive? Binance negative. OKEX getting larger. Actually, that's getting smaller on OKEX. Negative, negative. Huh. It's kind of crazy. Yeah, that's Max Payne that I was looking at on the Deribit stuff. 29,250 and 1,900 on ETH. So this is another site that does like aggregate order book flow and stuff, but it's just not as detailed as I would like it. Like that's like for the USDT order book depth, and then you can like come in here and modify like how big of orders you want to be able to see. You can turn on the sounds or whatever when you get the big orders, like 10 Bitcoin a piece or whatever. So people are selling into this for now, but 29,300 holding. I don't know. We'll have to see. People are definitely selling into this though. There's like big sell orders coming into this on Binance. People are getting their shorts filled here. So it's a matter of like, okay, is there enough shorts to actually stop it or not? Here's another big one, another 5. Someone's getting filled. Someone's filling on Binance. There's somebody on Binance that's trying to get filled for shorts here. So here's another big one. They're selling 10 at a time. Did you see that flash right here? Where is it? That's a buy. That's another sell for 5, 5, 5. Somebody on Binance is filling like 5 and 10 Bitcoin orders. Yeah, again, order flow. It's kind of just how yeah, I mean, the volume is super low. That's a big sell. 16 Bitcoin. That's not $16 or $16,000. That's 16 Bitcoin. So that's quite a bit. Here's another 5. Yeah, so there's sell orders coming in on Binance. Somebody's trying to get filled there on Binance. Yeah, the price can skyrocket on super low volume. That's definitely a thing. I mean, especially during the weekend, like all one whale has to do is like complete is like, here's another one. See, here's a good example of that. See, 10. Somebody keeps coming on Binance and selling like in 5s and 10s. So there's some whales. See, here's another one. 5, 5. Someone's getting filled on both sides. A 50 Bitcoin buy order. Yeah, that's kind of crazy. That's a lot. I mean, so it's pumping up slowly, but it's like that's what I'm saying. There needs to be so much liquidity, like for this to like make new lows and go down that far. Like I'm talking like fresh lows, like 15K or below or whatever. Like that's insane. Short covering moves price higher. Yeah, it might be shorts covering. The question is, where do those shorts puke? And that's what you find with this liquidity map that I showed before is like most of those are going to end up puking at like 31, 31, 2. So we'll have to see. It's kind of interesting here. Next funding candle, the shorts have to pay the longs. Yes, that's correct. So that's probably why they're covering. Some of the shorts are going to close. But this looks like covering to me. This doesn't look like, see, like those are huge buy orders 20, 43, 5. There was a 51 before. Looks like shorts covering or closing here. Yeah, the open interest is important. Open interest is always very important. This is on just USDT though. If we look at spot, it's probably different. Oh man, it's super skewed. Super skewed on Binance for spot. See, like this is what I would prefer to look at because this is like the actual spot volume. I'd rather look at the spot volume instead of the other stuff because this is what really matters. Notice how most of the spot orders are significantly lower than the futures ones. Because at the end of the day, for the futures, those are going to be leveraged. So it's like it flashes that it's like 10 or 50 Bitcoin. But at the end of the day, it's probably like much lower than that and it's leveraged out or margined. So I don't think this doesn't show open interest, but I mean, we can look at that on, it only has futures here, but that's okay. Period. 1 hour. Yeah. OI is going up right now. trending upwards. That's hard to see in there, but hmm. Yeah, I mean, you can see it here. I don't like how it's displayed on this website. It's kind of crappy how it's displayed here, but it is what it is. It looks like it's in general, like it's trending upwards. So we'll have to see. And this is also like a very low time frame. If you just look at like the 4 hour, it's probably different. Yeah, see, it's like slightly trending up. There was like a dip, and now it's trending up and recovering. So yeah, you are 100% correct on that. I mean, that's totally possible here that this fresh long's opening up at this little support level or whatever, and that's why we bounced. But at the end of the day, like I said, I think the majority of the liquidity is going to be coming from the FOMC move. But I'm gonna go ahead and get off here. It's almost 10 o'clock. I streamed for like an extra 30 minutes. Um, so I'm gonna go ahead and go. Before you guys leave, make sure that you smash that like and subscribe button. I really appreciate your support. Again, look for make sure that you're following me on Twitter and stuff. All of the links are down in the description below. I'm releasing the Venom 4 version of the algo on May 1st, so that's Monday. If you guys want to take advantage of that, again, look for the tweets, all of that good stuff. There's going to be discount codes. I'm going to be randomly selecting 5 people for a pretty hefty discount code on that. So that's going to be really awesome. Maybe I give one away for free. Maybe I give 1 or 2 people something away for free. So um, stay tuned for all that stuff. Again, if you guys want the full backtest results, I'm going to be updating my site probably tomorrow. It's too late for me to do it now. I'll probably do it tomorrow, Sunday. But anyway, all that stuff will be live both on Astrobit and here. So there is all of that. Yeah, I will talk to you guys later. And I hope that you all have a fun, safe, and blessed weekend. And we'll see you guys next week. Take it easy.